It was supposed to be a blockbuster day for the Nasdaq following blowout earnings for Amazon. And then Goldman Sachs increased its price target for Amazon up to $2,000 per share. At the height of the day, the S&P 500 information technology sector was up 1%, but by midday, it dropped into the red. You just can't catch a break. In the oil and gas sector, Chevron beat every analyst estimate, while ExxonMobil fell short on both production and profit. ExxonMobil has lost over $47 billion in market value in the past 12 weeks. Well, it's Friday, which means it's time for another Wells Fargo scandal. Yay! And lastly, the 10-year yield fell, which means it's time for me to shamelessly plug my videos this weekend. On Saturday, Crash Course, and on Sunday, the next bull market. I suggest watching both videos. Now let's take a look at the market. You know what the 20-year monthly chart looks like, so we're going to jump right straight here to the 6-month daily on the spiders. The close on Friday, 266.56. I've drawn these trend lines you've seen before, and it seems like every time we get near this trend line here, we bounce back down and off this lower trend line. So we're creating a wedge here. So I expect maybe early next week an approach to this trend line and possibly another downtrend back down here to this baseline here as we continue to, say, trade sideways. Let's go ahead and take a look at the MACD. And here you see patterns, patterns, patterns. We had a bottom here and we had a bottom here. And we've got this move up through the trigger line with this first move and attempt here to get above zero. Looks like this first move here in early mid-February. And we come back down to the trend line here, which we have as well here. And we've gone sideways a little bit paralleling. The fast line is paralleling the slow line just kind of as it did a little bit here. So are we going to get another attempt or stronger move up here like it did at this point here? Possibly. And I think we'll see next week. If we do that, we do a little move up, but then I expect it to hit that trend line up at this point here and then reflect back down. That's the expectation. That's the probability. We'll have to wait and see. Looking here at the momentum, these two areas through here and here look very similar as here and here. So now all we have to wait and see is, do we get another downtrend here at this point? And that would be late next week and perhaps even the following week. Looking here at the price rate of change, looks pretty similar here. Bottom, bottom, the move up and then back down. The move up and then back down. So we've got this little spike here that actually went back through. We did not spike through here, but that's of little consequence to me. In my opinion, the probability is that we will head back down again next week, maybe into the week after that. Looking at the relative strength, much the same, and the stochastics indicates here very similar as well. Bottoms, bottoms moved up here, came through, back down through the slow line, and a little bit of hesitation here, such as we had here. And is it going to move up through the slow line before it comes back down? We'll have to wait and see. Again, that is my expectation and the probability. We had relatively low volume here on the upside, so it's not real strong at this point yet. And then the Williams, we've got a spike up here, but I think that may fall off here in the near future. Going back up here to the price chart. Again, this wedge, we're trading sideways, more or less in this oscillation as we get tighter and tighter and tighter toward that pinch point. And at that pinch point, that's when I expect things in all probability, or the higher probability in my opinion, that we will pop to the upside and then make an attempt at crossing above this previous peak and then make an attempt at a new high at this level here. But we're going to go sideways for a little while before we attempt any breakout. So for today, that's ChewDog Charts. Thank you.